Hello everyone, my name is Khan and welcome to the new video. In this video, I'm going to teach you about the multiple time frame analysis. Which time frame is suitable for you and when you can trade in a higher time frame and lower time frame. And firstly, we need to understand there are so many type of like time frame like 1 day, weekly, 4 hour, and even 1 hour, 50 minute, 5 minute, and everyone trade in a different time frame. But it totally depends on you that which time frame is suitable for you and which kind of trading you are trading. Like you are day trader, swing trader, like positional trader, and some scalper. So it totally depends. Like scalper can't use like weekly, daily, and 4 hour time frame. And same thing applicable for the swing trader and long term perspective. For the longer run, we don't need to care what happening in a 1 minute time frame and 5 minute time frame, even 50 minute time frame. And that's why the most of the people get confused using the time frame that which time frame is suitable for you, and they look for the daily, weekly, 1 hour, 15 minute, even 1 minute. So you don't need to focus on these time frame. Like for example, if you are day trader, then you can use 1 hour as a higher time frame and 5 minute as a lower time frame. That's it. Okay. And same thing applicable for the little bit lower time frame like 50 minute as a higher time frame and 1 minute or maybe 2 minute as a lower time frame. And for the scalper, we can use 5 minute and 1 minute time frame combination. So these are intraday perspective. What if you are looking for the swing trading, then 4 hour at least you have to use as a higher time frame and 15 minute as a lower time frame. And same thing applicable in a daily time frame. Daily time frame is a higher time frame, and then you can use 1 hour and maybe 2 hour as a lower time frame confirmation before the buy or sell. So there are so many time frame, but you have to stick on your time frame that which kind of you are trader. Firstly, you need to identify, and later you can decide that which time frame is suitable for you. I will show you exactly that which time frame is suitable for you and how many risk reward and what kind of entry you will get when you using higher time frame, lower time frame, even 1 minute and 2 minute as well as here. Okay, so let's see, and I will show you exactly on chart, then you can understand more better that what I'm trying to explain here. So let's see. Firstly, we need to understand here that what is a market direction. Firstly, when you identify our trend direction, then you have to wait for some clear confirmation before the buy and sell, like inducement taken out and mitigate any kind of like POI, order flow, and order block. And the next step is here that when market not tap any kind of POI, then market just hit the previous high or low, then we can plan for the buy or sell. That's it. Okay. So in this case, we can see here market momentum is bullish and we are looking here for the buy to the upside after taking out the inducement. So in this case, we can see here clearly that market create a break of structure is here. So once market create a break of structure, that means the trend is bullish and we are looking here for the buy to the upside, because when market create a structure like this one, so we are expecting some bullishness to the upside. So after break of structure, generally what are you looking here? Generally we are looking here for the taking out the inducement, then wait for mitigation of the order block and order flow, then we can plan for the buy to the upside. In this case, where is the inducement? Look at this one. This is our inducement is here. Once market taken out this one, then we can plan here for the buy to the upside. And if you are thinking why not this is an inducement, let me explain you here. Look at this one. This is our impulsive move and this is a corrective move, again impulsive move. And if anything happen between this one, this is called internal, not the external, or you can say big move like a major impulsive like this one, right? So this is impulsive move. So this is a corrective phase is here. So if market break the previous high, so we can expect where is market going on, and this can be act like a inducement. Like if market broke this one, so this low act like an inducement, and then we can anticipate the market trying to go higher to the upside. That's why this is an internal structure and we can't use this and as an inducement. This low act like an inducement. Once market taken out this inducement, then we can plan for the buy to the upside. And this is our PY is here, means the order block. Okay. And this is our order flow is here. Look at this one, the unmitigated order block is available here. Once market taken out the investment, then we can anticipate that market trying to go higher, and once price tap on it, then we can plan for the buy to the upside. Firstly, look at the time frame is here. This is a H4 time frame for the swing trader. Okay, so if you are a swing trader, then you can use a 4 hour as a higher time frame, and you don't need to use a lower time frame for the any additional confirmation. You can directly plan here for the buy and sell. Okay, let me show you exactly how you can take entry here for the buy. This is our PY, inducement is here, break the structure, and once price tap on the PY, then we can directly plan here for the buy, put the stop loss just below it, and where is target. Target you can set based on the previous swing high, and also you can set based on the Fibonacci tool. 1.618 is your final target is here. So you will get 5.13, almost 5 hour is here if you set based on the Fibonacci tool is here. This is our target based on 4-hour time frame, and this is our swing entry here. Once market is a bullish, taken out the inducement, tap on any kind of like PY, order flow and order block, then buy here without any lower time frame confirmation. In this case, what happening in a lower time frame, you don't need to care. You can directly buy here. Okay, so this is our first process when we can take entry here. Once press tap on it, then you are looking for the buy in a lower time frame confirmation. In that case, what happened? If you are buying 4-hour as a PY, then you can buy here as a direct entry. Second thing is here, if you like to reduce your stop loss and maximize risk reward, then definitely you can go lower time frame. Like if you are using 4-hour, then at least you need to use a 15-minute as a lower time frame confirmation. So let's see what happening here in a 15-minute time frame, then how you can maximize our risk reward and what process you need to check here before the buy in a lower time frame is here. Okay, so this is our 15-minute time frame structure here, and this is a 4-hour time frame entry here. Let me explain here. All right, so this is our PY is here, 4-hour time frame PY is here. So once press tap on it, and we need to wait for it to take out the inducement, then we can plan here for the buy. So how you can take entry here? Look at this one. If press tap on PY, then how price is directing? Market must be broke the previous high, and after taking out this one, market taken out the inducement is here, then we can plan here for the buy at this point. You don't need to buy at this point here, because so many times what happened, press tap on that PY and then failed. Okay, and then market go higher. So you need to take some additional confirmation here for the buy in terms of the internal structure, like break this one, taken out the inducement, and this entire zone act like a PY, and this is a high probability zone for the buy to the upside like this one, right? So same thing happened here. If market tap on that wave, if market tap on this PY is here and create any kind of like bullish structure, definitely we can plan here for the buy to the upside. If market not able to create any kind of like PY, then we don't need to buy here. Okay, so this is our 15-minute time frame structure. And also look at this one. The previous structure like is here, simple leg is create here, all right, and then take one more pullback is here, and this is internal structure, break this one. Okay, it means the previous swing high and previous swing low and this previous swing low, right? It means market broke this structure, then we need to wait for it to take out the inducement, maybe this one. Then at least market taken out the inducement, then we can plan for the buy to the upside. But in this case, we can see here there is no inducement taken out. Just create impulsive move, again corrective phase, again take a pull back to the higher. So you have to wait for it to take out the inducement, then we can plan for the buy to the upside. In this case, we can see here clearly that market momentum is a bearish. So market not create here any kind of like inducement. This is a higher time frame in a 15-minute time frame. If you are looking here for the buy as per the higher time frame, 15-minute and 2-minute as a lower time frame, so you can use these type of thing, right? But you don't need to take like a 4-hour PY every time, because it take a lot of time to create and mitigation, and then create a lot of time to develop a lower time frame entry. Okay, so sometime you will see these type of thing, then you can take. Otherwise, I'm just showing you H4 as a higher time frame, 15-minute as a higher time frame. You can think like this one. This is a 15-minute time frame structure. Okay, so once market create this one, break the structure, again going high, push downside, again break the structure, and market not taking out any kind of like inducement. So once market taken out the inducement, then we can plan for the buy to the upside. We can see here exactly what happened here. Market create impulsive move, take a small pullback and go higher. This move act like a inducement. Why? Because the break the structure here, and this pullback create above it. So if market taken out this one, we can count as a major inducement. It means if market taken out this one and tap on any kind of like PY, definitely we can plan for the buy to the upside. So this is our inducement is here. This is our inducement, and this is our order block, which is unmitigated order block on bottom of the move is here. Once press tap on it and create here any kind of like lower time frame entry, we can plan for the buy. But look at this one. This is a 15-minute time frame. If you looking here for the buy based on 15-minute time frame is here, right? Where is stop loss? Stop loss you can put here just below it, and the safer stop loss just below this structure. So it totally depend on the structure where you should put your stop loss. In this case, I'm putting the stop loss just below it, because this one looks more safer. Stop loss is here, and this is our buy entry here. Put the stop loss just below it and taken out the inducement, and this is a 15-minute time frame entry is here. And where is target? Target we can set here like this one. In this case, you will get 20 1 RR is here. Approx 4 R is here compared to the first one entry here. This is a first entry here based on 4-hour time frame, and this is a 15-minute time frame. And if you refine into lower time frame, even 1 minute and 2 minute time frame, then what's your risk reward? Risk reward will be exponential growth here, right? Because when you switch into 4-hour time frame to 2 minute time frame, you can see how many times like a mark how many times time frame has been changed here. Okay, so if you are buying here, the put the stop loss just through it. So this is your risk reward, 4-hour time frame and 15-minute time frame. Now I will show you exactly in our 2-minute time frame what happened here in 2-minute time frame and how you can take entry, because this is a 4-hour and this is a 15-minute time frame and this is our 2-minute time frame. Price type on higher time frame PY means the 15-minute PY. So once press tap on it and create here any kind of like police structure, same as a 4-hour PY, tap on a 15-minute lower time frame structure. So we can use here, like if market tap here, create any kind of like police structure, taken out the investment mitigation, and we can buy here at this point. And this is a strong zone for the buy. Okay, this structure shifted here, you can call it like chalk right here. So this is our entry criteria for the buy. Look at this one, previous low structure is a broken, and once market broke it and taken out the investment, then we can plan for the buy, otherwise no, right? So let's see what happened next after this one, and market create a structure like this one, and after taking out this one, we can see exactly here. Look at this one. Lot of people do lot of people are just trying to buy after create this structure here, and this is called change of character or market structure going to be changed, and taken out the investment is here. Once market taken out the investment, then we are planning here for the buy on unmitigated PY and order block and order flow. Just below it, we can say sometimes market create unmitigated order block and order flow, like unmitigated shadow. There are so many things happen here, but you don't need to buy here without any additional confirmation. We need to wait for it to break the previous high, then we can buy here for the better confirmation here. If you look at this one, this is our order flow is here. For example, if you are planning here for the buy, chop, taken out the investment and tap on it, and then we can plan for the buy, right? But I will suggest you always taken out the investment and break the previous high is here, maybe the first structure, then we can plan for the buy, which is more better and more powerful area for the buy to the upside in a lower time frame. So this is our lower time frame entry here, and let's see what happened next here. This is our 15-minute time frame entry is here. This is a direct entry in a 15-minute time frame, and let's see what happened next here if market create here. Okay, sometime what happened, market not create in a lower time frame structure any kind of entry. So that's the pros and cons in a higher time frame and lower time frame. But in a probability of mitigation in a higher time frame is a higher compared to the lower time frame. So these things happen so many times. Like taking out the investment break, again this structure we can use as a order flow as a PY. So look at this one. This is our recent unmitigated order flow is here. It means if price tap on it, definitely we can plan for the buy. Where is stop loss? Stop loss just below it, and we can put the stop loss just below it. This is safer side is here. So this is our entry, and this is our 15-minute entry, and this is a 2-minute time frame entry here. And where is the higher time frame? Like this is our 4-hour time frame entry is here. And let's see what happened next here in the lower time frame as well as here. And after that, what happening here, we can see here market mitigate this PY is here, and once price mitigate this PY, then you can set your target based on lower time frame. I will not suggest you to set your target based on 4-hour time frame, because in a 4-hour time frame and lower time frame is a 2-minute time frame, there are very big difference between the time frame. So you need to set your target based on 15-minute time frame to 15-minute, and 2-minute time frame to 2-minute time frame, and 4-hour time frame to 4-hour time frame. Look at this one. If you're looking here based on the 2-minute time frame, so this is our 1.618. You can set this target is here. Okay, you will get almost 3 hour, which is very better here. And also, if you like to maximize your target based on 15-minute time frame PY, so you need to check here 15-minute time frame PY. Where is the 15-minute PY is here, and then you can set your target. Okay, so this is our 15-minute target is here. The previous swing high is here, and previous swing low is here. 1.618 is here, almost 3.5, right? So this is our target is here. But if you set your target based on 4-hour time frame, because of the market react from the higher time frame PY, so this is our target will be here, which is almost 25 RR, right? So this is our target is here, almost 25 R. and in a 50-minute time frame you will get 21, and 4 hour is a 5 hour. Okay, that means the 4-hour time frame to 2-minute time frame, the difference is a 5x. Now you can understand that which time frame is a suitable for you and which one is a working for you, like a 4-hour time frame, in a 50-minute time frame, in a 2-minute time frame. So there are so many time frame is here. Okay, but main thing is here that if you are finding your POI in a 4-hour time frame and taking entry in a 2-minute time frame, then I don't think you will hold the position based on 4-hour time frame, because you will see so many times the market push higher and lower, trend change so many times in a upside and downside. That's why. So you need to set your realistic target based on the 50-minute time frame, 2-minute time frame, and 4-hour time frame. So if you hold the same position entry here in a 4-hour time frame, then definitely you can hold this position based on 4-hour time frame. But in a 2-minute time frame, it's not possible here to hold this position right here. You can see sometimes market came back around this break even after reach this point is here almost for 15 hour. After reaching the 15 hour, there are very low chances that you can hold your position and to reach your take profit is here. Okay, so that's the reason. So you need to set your target based on the realistic structure, realistic target. You don't need to set your target very randomly anywhere. So I hope you understand that which time frame is suitable for you and which one is working for you. That it doesn't mean that which time frame is working and every time frame is working. It totally depends on you. Like 4 hour, 15 minute, 1 minute, even one day, every time frame is working, and it totally depends you that which one is working for you. 50-minute also will give you more buy setup here, and 2-minute also will give you buy setup is here, and 4 hour is also. But main thing is here that if you are looking for the direct entry, you don't need to switch into lower time frame. Then always use higher time frame like 15-minute at least, and 4 hour, 1 hour you can use any time frame. You don't need to take a lower time frame confirmation. Generally, the lower time frame confirmation we use for the additional confirmation to refine your entry and maximize your risk reward. So many things happen. That's why we use a lower time frame for additional confirmation. So thank you so much everyone watching the entire video, and I hope you learned that which time frame is working for you and which one is suitable for you, and how many times you will get a risk reward and which one is a more greater and more better for you. It doesn't mean that 2-minute time frame is always better. So many times market hit your stop loss and came back on your entry point, break even, so many things happen. But risk reward will be great always in a lower time frame, but you don't need to chase the risk reward every time. You have to buy and sell on a realistic area and set a realistic target. Those realistic target can be 2 hour, 3 hour, and 5 hour, which is very better compared to the 20 hour and 25 hour. So thank you so much everyone to watching the entire video. I hope you learn a lot of things, and if you are new, subscribe our YouTube channel and so on our free Telegram channel, link in description. Go and check out, and I will see you in the next video. Happy trading.